Okay, so what I'm going to show you today is the short, medium and long-term concept. Now this concept is a fantastic concept if you learn it properly. This concept will open up your clients. It will give them an idea about why you're there, why you're sitting with them today, and what it is that they want, specifically their personal needs. So I'm going to show you the concept now. I'm going to split it first of all into three areas. The short term, the medium term and the long term. Okay? So we're telling the customer, look, this is a concept I'd like to share with you. It's something I learned during my training course at Prosperity. Now when we look at the short term, we're talking about 0 to 4 years. And we look at medium term, we're looking at 5 to 10 years, and long term is 10 years plus. So we're giving them a clue about when we're talking about this, the time specific zones. Okay, what is short term to us is 0 to 4 years. Okay, medium is 5, 10, and long term is 10 year plus. And I'll explain a bit more why we do that in a moment. So once we've got that in place, the next thing is very simple. We just ask them, what would they spend their income and capital on in the short term? Now there's types of things that people normally come up with, things like their rent, or maybe their home loan, perhaps if they own their property. It could be things like utilities, you know, their water, electricity, their phone bill, their internet, and so on and so forth. Food, of course, and transport. Okay. Maybe entertainment, going out, enjoying themselves, having nice meals and going to fun parks and so on. So whatever it is, we write that in there. There could be other things in there as well. It will depend on the individual that you're sitting down with. All our prospects are different, but it will depend if they're single or whether they're married, married with young children, married with older children, or maybe married with the children already left home. So it will depend. Everyone will be different, so write in what it could be. It could be education in their short term, for instance, but write down what they tell you. Now, a lot of these things we're going to be paying for the rest of our lives. Things like utilities and food and transport, of course, those are going to be there for the rest of our lives. So we can simply say, well, these sort of costs are going to be there right the way across the medium and long term as well. However, what we really need to identify are the larger things that we need money for, capital for, in the medium and long term. So what sort of things, other than our general outgoings, will require capital in 5 to 10 years' time, Mr. Client? Now, again, it will depend on the age and circumstances of your prospect, but we could say in the 5 to 10 year period it could be education, let's say. They could say to you, it's starting a business. They could tell you it's something like maybe buying a property, buying a home. Now, when they come up with these things that require capital in 5 to 10 years, it's important that we ask more specific details. So, do they know where they want to educate their children? Do you know the country? Do you know the actual school? Do you know the costs of that school? Likewise with a business, what type of business do they want to set up? How much is the startup cost? What's the competition like? What home do they want? Not only what place, but what streets, what will the colour be, what will the layout of the property be? When they start to be specific about a particular goal or aim, then that's telling us it's something, a real need, it's something they really want, something they thought about, something they're serious about. If they're more vague, well, I'd like to educate my children in the top school, but they don't know the name or the area. Or, yes, I'd like to start a business one day, but it might be this business, it might be that business. It's more vague, they're not really specific, they don't know, that's more of a dream. Now for a hot button, for when we look to people that want to invest their future, we're looking at specific needs and specific goals, something they thought about. Because that means it's a hot button for us, it's something we can help them plan towards. Likewise in 10 years plus, all of us at some point in our lives will need to slow down. And hopefully retire one day. Some people may just want to slow down in life. You know, when we get to a certain time in our life, certain age, maybe we can't still carry out the same jobs that we had, maybe we can't work the same hours that we once did. So we need to perhaps look at the occupation that we can do at that stage. Now, what will be the difference here is income, what income we have at retirement. Obviously, we've managed to save money for our retirement, we've got a decent amount of income, we have a choice of what we do in retirement. If we don't, then we have no choice, we have to find any work we can to ensure we cover our costs. Okay, so that's something we can look at later. The other things in retirement might come up. It could be grandchildren. Maybe you want to put money aside for your grandchildren when you're in retirement. Maybe it's a holiday home. Maybe it's medical care. Maybe it's a dream holiday. Whatever it is, again, once you write it in there, try and be specific. Do they know specific needs, specific incomes, specific costs? If they know that, then we know it's a hot button, we know it's something they really want to do. Okay, so this is where we get to on the first stage of the concept. Once we've completed this, the next thing to do is to ask a very important question. Now, there's a series of questions I'm going to give you that you need to remember, to learn and practice. So the question at this point is, do you have enough money to pay for all these things? Do you have enough money today? Always talk in today's terms. So 99% of the people we go and see, of course, the answer is going to be no. The second question to ask them, where will the money come from to pay for everything? Where will the money come from to pay for everything? And then we go quiet. And we wait. Now, the answer is going to be, of course, income. From their income, okay, and by getting that income and saving that income, they pay for things throughout life like most people do. The next question we've got for the client is, what could stop you from earning an income? Once again, we wait, we're quiet, wait. Usually, the first thing they come up with is loss of job. So we write loss of job. We then probe a bit further, we ask for what else could stop you from earning income apart from loss of job. And they hopefully will come up with things like accident and illness. And finally, of course, we could die, so death, premature death, dying too soon. Okay, so these are the types of things that can really stop us from earning an income. So let's look at the accident and illness first of all. When we talk about accident and illness, we're not talking about an accident where we break a finger or a toe or a bone. We're talking about something where you can recover from in a few weeks. We're talking about serious accidents. We're talking about disability, something that's permanent, that is going to change the type of job that you do. Maybe you have to rehabilitate into a new type of job because of that accident. An illness, again, we're not talking about the flu, we're talking about, critical illness, maybe a heart attack or cancer. We know today with science and medical advancement, we can recover from very many serious accidents and serious illnesses today, but it will take time to rehabilitate and maybe retrain. So it's important that we cover that should anything should happen. And of course, if you should die too young, something happens to you, pass away, making sure there is money in place for your family in that eventuality. So we want to ensure there is a safety net. Safety net as in the tightrope walker in the circus. You see them, they do the show 2-3 times a day, every day, 360 days a year, and although they're walking that tightrope, they know that they need that safety net. There could be that chance that they slip and fall, and they need that safety net in place underneath them. And the same with us as people. We want to have a healthy, long life, but we don't know what could happen. We could meet with an accident, illness, or premature death at any time. We just don't know. So we need that safety net in place to ensure that our family get the protection They need protection to ensure that if you have accidents or an illness, you're not worrying about the financial outgoings. How am I going to pay the bills? How am I going to pay for the education? No, the money is in place because you planned and you have a protection plan there that will give you the income that you need to rehabilitate. If you should meet with an accident and die, unfortunately, or an illness, no, it's making sure you've got a peace of mind that the money is in place for your family, they can maintain that chosen lifestyle. So it's really important. Protection is the cornerstone of any financial planning. It's pointless having a savings plan for 5, 10, 15, 20 years if something happens and you cannot pay after 2 years. Absolutely pointless. No point in it at all. Protection's got to be the number one priority. Once you've done that, you can then start to think about your medium long-term savings plans. Okay, so that's protection, we've covered that. The next thing then is loss of job. What happens if you lose your job? Well, how long would it take you to find another job, Mr. Prospect? That's a question we ask. How long would it take you? If you lose your job, how long would it take you to find another job? So typically, people say 3 to 6 months. Now, some people might say slightly longer or even less, but typically it's 3 to 6 months. Okay. So, really what we're talking about is covering your outgoings for that 3 to 6 months period of time. So, what we need to make sure is whatever your outgoings are each month, you put that money into a bank account. Okay. Now, there's 2 reasons why we're going to suggest a bank at this stage. Okay. One is it's best advice. Put the money in the bank, or instant access when it's needed if you lose your job. 2, we're sowing the seed into the prospect's mind that the bank is the best place for short-term money, because it's the truth. It is not the best place to put your money for your medium and longer-term goals. You know, and I know, that interest rates around the world today are very low. Bank interest rates in the UAE are well below 1%, and which the truth will be said in most countries around the world. If someone's getting higher than that, then it's likely to be in a currency which is not a hard currency. It's likely to be in a country where there is inflationary issues, and that currency is probably devaluing. The cost of living is going up at exponential rates, therefore it's still not a good place to have your money, and you can demonstrate that. If you require any help or support in that, you can come and talk to me, and I'll help you explain to a customer. Okay? But the medium and long-term goals, well, this is where prosperity comes in, and you tell your prospect. Prosperity here is to help you not only with your protection, but also your medium and long-term goal. We will look for areas based on your risk profile and your time frame to invest your money. When do you need that money back, and how much risk do you want to take with the investment? And we will ensure that we will do all we can, and obviously our goal is to ensure we beat the bank rates and also inflation. Okay, now, once we've done this part, we then say to them, okay, when we talk about the future and planning, there are 2 ways to plan. There's the painful way, or there's the painless way. The question we ask the customer is, what do you prefer, the painful or the painless? And of course, again, most people are going to say painless. I don't think we really want the painful way, everyone wants the painless way. So we explain to them, well, look, the painless way is to save money over a period of time that builds up into a cash reserve to pay for the bigger things that come along in life. That's what we call painless savings. Okay? Take advice from professional financial advisors like us at Prosperity to help you design and plan for your future. Okay? The painful way is not to plan. And remember when we did our first presentation, we said people don't plan to fail, they just fail to plan. And this is what we're talking about here, they just fail to plan. So if you don't have proper plans in place to cover your major goals in life, what happens when suddenly your children need education? Well, you may need to go and borrow money. And if you borrow money, you're going to obviously pay interest rates, which could be quite high. Likewise with properties or anything in life where money is required urgently, you borrow money at high rates, or you sell assets, or you cut down your lifestyle, which is painful. You can't perhaps educate children as you would like to. You can't drive the car, maybe you can't even afford to drive a car. Maybe the home you're in, you have to downgrade. So all these things in life become very painful. Of course, in retirement, that's the last thing you want. So the painless way is definitely the way forward. Now, if you learn this concept properly and you follow my guide of how to do this concept, I can assure you that this is probably one of the best concepts that you will ever learn in financial services, and it will set you up for your future and for your clients as well, because your clients will fully understand why you're sitting with them today. Why are you asking about their income and their expenditure and assets? Why? Well, because we're trying to plan for these things throughout life. We're trying to plan them in the best possible way and in the painless way. So it's very clear to them why you're sat with them today doing a financial review. So I wish you well. Good luck with the concept. Don't forget to learn those specific questions. They're very key. And I wish you all very